Hi, welcome to the November update. All kinds of big news, interest rate cuts, Bitcoin, stock market. Let's dig into it. Hi, everyone. Welcome to Control and Compound. I am Darren Mitchell, and joining me as always, Christina Wyatt. Christina, how you doing today?
Hi, Darren. I'm doing great. Getting a little colder, right? We're hitting November. We're getting into those winter months. I can't believe it. So I've got the long sleeve out today. Put away the short sleeves. We're heading into the cold weather now.
I know. Anyway, I love fall. I'm not as big a fan as winter, but change of season is fun. So, okay, Christina, where do we want to start? Actually, let's start with the Bank of Canada because that was a big one that we were hoping for. What happened to interest rates this month?
Yeah, so big news from Bank of Canada on October 23rd. They did announce that 50% basis point cut, right? We saw the overnight rate drop to 3.75, which a lot of people were hoping for. It actually marked the fourth consecutive rate cut. So this is, over 4 years, we've seen these rates come down. And yeah, now we're at 3.75. So a big portion of that came from the inflation data that came out in September. So going into inflation, we've been trying to hit that 2% mark in order for them to lower the rates. And in September, it actually fell to 1.6% year over year. So that's a slowdown from August at 2%. And it's actually at its lowest level now since 2021. So I think they can safely say that inflation is in check. Now, this was largely driven by a drop in gasoline prices. So that was influenced by global oil prices. And if we actually took out the gas prices overall and transportation related costs, we'd still be at 2.2%. So still around that 2% rate that they were looking at. Now, as an individual, food prices were actually up 2.4%, and rent increased 8.2% over the previous year. So like it's slowing, but you're not actually going to see this translate into your everyday purchases, which is why they really needed to cut that interest rate, right? People are struggling with those variable mortgages. We're seeing people with debt issues, things like that, and the economy slowing down. So in order to stimulate that economy, they really did need to make these cuts, which is exactly what they're doing. Now, moving into the future, they are speculating that we might see another 50 basis point cut. On December 11th, they're going to be making their next announcement. And they're going to be looking at, GDP, the employment showing, softening trends, all of those things. And people are saying that we're going to see a cut of at least a quarter for sure in December. We'll see how that looks. They'll have some more inflation data. I don't even know if they're really going to be looking at the inflation so much anymore. I think that they have to start looking at that, the more of the economy, stimulating the economy, getting people back out there, employment rates up. And that's hopefully going to come from these cuts that we're seeing.
Yeah, I mean it's a balancing act, right? I mean they increased rates to slow the economy and slow the increase of inflation, but did they go too long and too high, and should they have come down quicker? I mean, I guess time will tell how we are, but my only comment would be the rate of inflation has slowed, but prices are still up significantly in the last few years. So I don't think real wages have caught up for most people. But anyway, it is good news. So let's celebrate good news on that. And then now, what about the Canadian dollar? How are we doing compared really to the U.S.? I guess this is a key marker. How are we doing to the U.S.?
Yeah, so that didn't look so good over the last month. Last time we did an update, I was all excited because we were at 74 cents. Yeah, it's great, 74 cents. We're actually down to 71 cents as of the end of October. That definitely, like that shift reflects the economic updates that have been coming out, the interest rate changes, the reduce in demand pressures, like lots of different things that they're looking at that is definitely impacting the Canadian dollar overall. So we have seen that decline. I also think it might be because you took a trip to the US, Darren, like that could have impacted it as well. Made sure, just kidding.
Spent a lot of money when I was down
Yeah.
there. No. Yeah, well, I think a lot of dollars are fleeing out of Canada. I know in the real estate side, there's an awful lot of real estate dollars flowing out of the country. But, the flip side of that is if you own Bitcoin, or in this case, we're going to talk about the stock market next, uh, if it's U.S. holdings, your Canadian your equivalent Canadian dollars actually went up because of the lowering of our dollar. But if you look at the stock market last month, U.S. S&P up 1.3, so they're up 23% year to date. Canadian TSX was up 2%. Some of that may have been because of the drop in the Canadian dollar, and then 17% year to date for Canada versus a 23 for the states. But really, all eyes are on the U.S. election. Doesn't matter who wins. The markets like certainty. So I think after the election, oftentimes you see a bump in the stock market just because investors don't like uncertainty. When you have certainty, then you can plan accordingly, whether it's one party or the other. But Bitcoin's been an exciting couple days. We're recording here just at the end of the month in October, and Bitcoin's right now around $73,000, so it's just about at an all-time high, up 10% or $7,000 this month. It's up 20% in the past 3 weeks. So it kind of dropped earlier this month and now is up 20% in the past 3 weeks. That's 65% year to date and 111% in a 1 year period. And approaching that 80,000 that we were speculating it might be by the end of the year. I thought this month I just kind of talk about what is the sentiment. Is Bitcoin, is it good sentiment or bad sentiment? What's going on? And one of the ways you measure that is just basically something as simple as inflows and outflows. Inflows is just money going into the Bitcoin environment or universe. Outflows is money coming out. So October is on pace to be the fourth largest inflow of Bitcoin in Bitcoin's history. So a lot of people are putting money into Bitcoin. A lot of that is coming from the ETFs, the institutional investors. You've got some of these big Goldman Sachs and some of these firms saying allocating 1, 2, 3% or whatever it is for each individual one. So a bunch of money's flowing in. So $1 billion went into Bitcoin in the past 2 days. So it's funny. I updated it this morning because last night when I was doing it, I said $1 billion went in the last 7 days. And then I had to update it this morning because so much has gone in the past few days, and it's actually $1 billion in the last 2 days. So about $4 billion of inflow in this month alone into those into the Bitcoin universe. Couple things why. Some people think Trump would be good for Bitcoin because he spoke positively about Bitcoin. So some of the betting markets are thinking he's going to win. I have no idea. The Middle East is a little bit calmer. It kind of dropped when the missiles are going back and forth. There hasn't been missiles in a few days, so things kind of got a little bit calmer. They're hoping after the last episode it will slow down. And the ETF frenzy is really the other one we talked about, the $1 billion in 2 years. So those were kind of three things that people are speculating caused Bitcoin to increase. But we're up to 19,763,000 Bitcoins with a total limit of 21 million. Now, we're not going to hit 21 million anytime soon, but because they're decreasing every 4 years the amount they produce. But we're approaching, getting close to that 20 million of 21 million Bitcoin's mined. So pretty exciting time with Bitcoin. We're not Bitcoin experts. We're not recommending it. Fun to watch.
Yeah, it's definitely a wild ride watching Bitcoin. It's got its ups and downs, but it's neat to see.
And I will tell you, I called Christina yesterday and said, "Did you sell your Bitcoin?" And she said, "What?" And I said, "Well, it went up. Last time you bought it went down, so I just figured you must have sold." But it wasn't Christina that moved the market this time, so good news there.
All right, rolling into a real estate update. So the real estate market in Canada, as always, it's a bit of a mixed bag. But if we look across with September stats, home sales across Canada slightly rose about 1.9% month over month. They're kind of saying that's from the Bank of Canada rate cuts, aimed at improving affordability for people. So we did see home sales up. The national average home price was about $672,000. It remains down around 4% from last year. Now, if we look across the country, things change, right? So Ontario was actually up 4.1% from their average home price in August. But if we look and drill down into the GTA, their benchmark price actually decreased 4.6% year over year. If we look at other places like BC, they're a bit down 2.4% year over year for their average price. But Quebec actually had a great month, or year over year, we're looking at it. Their average home price is up 6.5% year over year. So it really depends on where you're looking, where you're purchasing. There's different trends in different areas when we look right across the country, but sales are up. I think with this newest Bank of Canada rate cut, you're probably going to see that go up again. Now, the other thing that we had happen that we talked about in our last update was they had that mortgage cap that they increased, and then they had the mortgage amortization that they increased for new home buyers. That's going to come effect in 2025. So that was some big news and kind of getting the real estate market flowing. Another one that came out this past month, though, was an incentive, and they're kind of bringing this back because it was around prior to 2016. They took it away, but it's a secondary suite incentive. So this is a mortgage refinancing program for people to be able to get secondary suites built in their homes, and I think that this is going to help with, getting more Canadians into homes, which I think is good. I think this is going to be a great incentive. I did look up some of the key program details just to share, because sometimes when these incentives come up, you don't know exactly how they work. So I wanted to kind of look at a couple different aspects. So with the eligibility to get this refinancing program, you must already own your home, and you have to live in one of the current units or have a close relative living there. And your plan is to add new units. So you want to add new units to it. From refinancing, you can access insured refinancing to fund the creation of the additional units. Now, the new units must be self-contained. So it has to be a basement suite or laneway home, and it has to follow the local zoning rules. So short-term rentals like Airbnb are not going to be allowed. It has to be a long-term unit. You can actually have up to 4 units on your property now, including your existing home. For this, you can get up to 4 units. And the property value, so the as improved property value must be under 2 million in order to fall into this refinancing category. And now this one's cool. You can refinance up to 90% of your property's value, including the new units, in order to do this. So yeah, I think people are going to utilize it. And the amortization up to 30 years, we can go. And for project costs, the financing must not exceed the total cost of the project. So there is some math to be done, and some, going through the project and what you can do. But I do think people are going to be able to use this, increase units, increase, hopefully get more people into homes, more Canadians into homes, which is what they're looking for. So yeah, that one comes into effect starting January 2025. So that's when we're going to see that refinancing option available to the public.
Okay, so it's more of a refinancing. They're helping you with the refinancing, not actually giving you money. And again, always check with your local municipality, because if the federal government says you can do 4 and your local municipality says you can only have 2 units, your municipality's going to win. But
Yeah, and municipalities as well. There are some incentives out there right now, depending on where you are, that will provide some additional loans, some additional incentives for doing something like this. This one's right across the board. It's a refinancing program to be able to get 90% out of your home to be able to build these suites.
Cool. That's great. I mean, I think all levels of government have recognized the need we need additional housing units. So typically the governments were saying no, no, no for an awful lot of years, especially some municipalities. So I think the yes button has come out a lot in the last couple of years, which is great to see. Speaking of real estate, along the sort of similar lines, there was a tax court case settled in Ontario recently. It was a guy that bought a condo and did long-term rental with it. And then he decided to start doing Airbnb, and he did Airbnb for 14 months, and he sold it to a non-arm's length. So again, we're not tax experts. Talk to your accountant. But what was the challenge here is the government said, well, you have to pay HST on the sale. And he was like, well, no, I don't. They went to court. He lost. And the reason why the HST was applicable, 2 reasons. One, he started doing Airbnb and he sold to a non-arm's length, so someone related to an affiliated company. So he lost that tax case. So again, this isn't going to happen to most people, but what I just why I mention it is it's so important to get good tax advice when you have a property personally held, corporately held, or you're renting it one way and then you switch to another way. Before you do that, talk to your accountant and say, what are the tax implications of this? Because this guy, I understand where he was thinking. It was just a long-term rental. I switched to Airbnb to make a little more money because costs have gone up. Now I still want it to be cash flow positive, and it ended up costing, in the total transaction, like 13% tax in Ontario. So anytime you change the use of a property, check with your accountant first, or you could end up paying a boatload of tax. In industry news this month, I thought I'd share something. I saw a great stat the other day. You think of, okay, institutional investors in Canada. So institutional investors, you think of the mutual fund companies, the ETFs, you think of the pension companies, but people often don't think of the insurance companies. The insurance companies are actually massive institutional investors. So I saw a cool stat the other day. They said if you look at all the mutual funds and exchange traded funds in Canada, that's about $3 trillion. So we get all the mutual fund companies and ETFs together. They invest about $3 trillion. They have about $3 trillion in assets. Pension funds in Canada have about $2.5 trillion. Well, boring old insurance companies that have been around for 100, 150 years and longer and have long-term investments, have participating whole life funds, have pension funds as well, invest for all the reserve accounts. Life insurance companies in Canada have just about $1 trillion in assets. So 3, 2.5, and 1 trillion for life insurance companies. So again, back to insurance companies are such a large part of the economy. They're number 3 when it comes to institutional investors, and people often don't think of insurance companies as a big investor because there's so many policies, so many reserves, so many clients, and they do so many pension funds and investment funds. Insurance companies, number 3 as far as institutional investors. Thought that was kind of neat.
Really cool. So moving into control and compound news, couple things, big things happening in our office this month. Now, as we're recording it, we're actually on our way to the Real Estate Investor Summit this weekend. So I'm not going to encourage you all to go and check it out. If you were there, definitely. We hope that we saw you. We were able to say hello. So conference season is kind of wrapping up for the end of the year, and we've got some big things happening at our office this last quarter too. So we are actually moving offices. We are continuing to grow, and we are moving into a larger new office. We're actually talking to the paint guy and the floor guy today, getting everything up and running. So very exciting. We'll have that new contact information shared when we're officially in the building. And as we move into this new building, we actually have a new employee that's going to be joining us as well. So the team is growing too. We're excited to welcome Maxine on board with us on the operations side of things. So very excited to have a new team member, a new growing office. So all positive and exciting things happening at CNC.
Yeah, we're excited about the move. Like everything, it always takes a little bit longer than you think, and a few extra things came up, but we're getting through it. Excited for Maxine, and we still have another position in operations we're actively recruiting for. So if you know someone would be a good fit in the Nova Scotia office, this is an in-person job. Let us know. Podcast wise, we had a really big month of downloads last month. So thanks to all the listeners and subscribers. A couple of the key ones that we really liked, or I guess we liked all of them, but we are live at the Keyspire Summit where we talk to the best ways to invest in real estate with some of the leading real estate guys and girls in the country. We had a podcast on the secrets to becoming wealthy. We had one with Bob Govro, which we love Bob. Ideal corporate structure. If you're a business owner, go back and listen to that one if you haven't already. And then we talked about permission slip to spend money, the secret ingredient to infinite banking concept, where we really dug into the death benefit. As people like, well, I don't really care about the death benefit. Listen to this podcast and you're going to care about the death benefit. It may not be your immediate number one focus, but as you age and as the policy grows, we're gonna show you in that podcast how the death benefit can be one of the literally best pieces of your financial plan that you can do. So check those podcasts out if you haven't had them. What do we got coming up this month, Christina?
Yeah, so another exciting month of podcasts. We actually are going to be releasing our second portion of the series with Bob Govro. We wanted to have a full-on accounting series, and we had such great feedback on that Ideal Corporate Structure podcast that we are going to have another sit down with Bob and go through some more very questions that you guys have that we have. The other person that is going to be on the podcast is Victoria Clooney. So you sat down with Victoria, had a great chat with her about her developments, what she's working on. She's actually got some projects out on the East Coast, so love hearing that. So we're going to have her on. We also did a podcast on EOS. So we've talked about it briefly in our updates that Control and Compound has started using the Entrepreneur Operating System. We implemented it. Well, we've been doing that for quite a few months now. We're a couple quarters into it. We want to share exactly how that's been working for us, share our core values that we put together. So Darren and I did a podcast specifically on EOS that I think any business owner out there is going to want to take a listen to. If you're using it, if you're not, we'd love for you to take a listen, give us your feedback on it too.
Awesome. All right. Exciting times at CNC. Thanks everyone for watching. Thanks for listening. Have a great day.
Thanks for watching this episode of Control and Compound. Don't forget to subscribe and hit that bell button so you never miss a new episode. And if you're ready to learn more, head to our website, controlandcompound.com. The link's below.